Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about Zillow Group. And the reason or logic for that calculation or the conversation I want to have is because, as you can see, on a year-to-date basis, in particular over the past week or so, Zillow has had a very strong week. This is after they've come up from under $40 a share to be sitting at about $43.43 a share as of the time of this video. I note this because, again, the housing market showcased a very strong recovery in both January and February, despite seeing home sales or the average price of homes drop for the first time in 11 or so years. So the question begs is, can Zillow recover? Can we see a capable way that they can get back up to probably not the 2021 highs, but at least some of the 2022 highs? And the logic here, the biggest concern that I have is that historically, even when the company has had the capability to really generate a large profit, they've continued to be unable to do so. So something I would note, if we change this view to annual, you can see that in 2021, the company itself brought in more than $8 billion of total revenue. Despite all of that, and a decent chunk of this was from their home flipping service, they were unable to translate that into actual profits. So if I come down here below to net income, you can see they lost $500 million in 2021 when they had a massive increase in their overall revenue. So the question becomes, the trend back down, can this actually translate into profitability? So one of the things that I wanted to highlight again is the current stock price of that 43.43 and how attractive a potential run up could be despite the macroeconomic headwinds. So therefore what? Here I am on the Zillow Group investor presentation to showcase what their strategy is. Keep in mind that I think if they can actually make a profit on the actual company itself, which a huge percentage of this, or one of my largest concerns, is their share-based compensation. But outside of that, you can see that from a positioning perspective, Zillow is in a very, very strong spot, coming in at more than 3 times more average daily users than either Realtor.com or Redfin. Now, if we come down here below, you can see that they highlight the average growth in the industry, which I do think that housing in general, yes, prices have continued to go up. However, 2021 was definitely an outlier year, and I don't expect 2022 and 2023 to see the same type of home price appreciation unless we see something materially change in the interest rate environment. Even now, you've already seen prices begin to stagnate. So I think that this growth story piece is not going to be as strong as they would like. So therefore what? There is a lot of different ways that Zillow is able to make money. Most of that is by referrals, as well as their now mortgage industry. So there are a lot of individuals that are utilizing or seeing home sales, and a huge percentage of them are using Zillow for that information. If I go down below, you can highlight some of the different opportunities that they have. I think the biggest one is as they continue to move into financing, that's going to be a huge opportunity for them, and they're going to continue to partner with real estate agents. I think this is going to be the biggest opportunity. I mean, you can even see that with things like ChatGPT and how it's revolutionizing some industries already. I think to the point that you can automate so much of what real estate agents do today in terms of sending homes, in terms of providing access to these homes. I think a lot of that is going to continue to be automated, documentation and such. And so the more and more you see this become a marketplace versus necessarily just a referral network, I think you're going to continue to see this opportunity grow for them. And then therefore what? They highlight the different growth targets available here with the goals of $5 billion in revenue. Keep in mind 2021 was more than $8 billion, but $5 billion in revenue, 45% adjusted EBITDA. Now, for those of you who watched a number of my videos, you'll know I think adjusted EBITDA is a bogus metric. I think it's a waste of time. As such, I'm primarily only going to focus on anything GAAP related. The reason why I don't like adjusted EBITDA is because there is a lot of really nice things in here, but what they adjust outward, which is in the appendix down at the bottom, is going to be things that I consider to be pretty important. For example, share-based compensation. This is how much they are paying their team. You can see that when we look through 2021 numbers, you can see that it was $311 million. That is a massive amount of money when we're talking about share-based compensation available there. So as such, I will continue to evaluate these numbers, and again, unless they can fix that, which again you can see that up here for December 2021, 200 million, that is a lot of money that is going right out the door in share-based compensation. So I highlight to say that when we have a company that is currently losing money, and you can see here in terms of their income before taxes, and again, these are adjusted income items. When we look at the year-over-year growth, so 2021, the adjusted EBITDA, earnings before income tax and depreciation, you can see that 200 million, or a full quarter of this, gets eaten up by compensation packages, which I don't think is necessarily appropriate for a company that is struggling to continue to be around. So all of this to say is I think that there is quite a bit of opportunity when we're talking about Zillow right here in terms of the stock can move up. However, I'm going to continue to think that we may see a return back to some of these lows over the next 12 months. The reason for that is because the housing market is continuing to stay on edge. I think higher interest rates are going to continue to be a pain point, as well as you continue to see the credit markets tighten up. As those continue to tighten up, that will be a contagion to the housing market. There is a lot of concern with CRE markets from a credit risk perspective. I think housing market is just going to be a stagnant industry perspective. That being said, this is just the opinion of myself, and I am by no means a financial professional. So if you find this content helpful, please leave a like and subscribe, and let me know your thoughts in the comment section down below. Thanks. Talk to you later.